The Secretary of the U.S. Treasury, Janet Yellen, now says that the Treasury Department has until June 5th before effectively they run out of money to pay their obligations. Remember, the so-called X date and when the Treasury would exhaust all of its emergency resources to continue to fund its obligations, that would be June 1st, which is Thursday coming up. She is now saying that it will be June 5th, and that will be the Monday following here. And she goes into great detail here in a letter to Kevin McCarthy, the Speaker of the House, as well as other congressional leaders, highlighting $130 billion of scheduled payments in the first 2 days of June that include payments to veterans, Social Security, and Medicare recipients, and then says the week after that, more than $100 billion extra in payments are needed, payments that she says they will be inadequate to satisfy. Kailey Leinz joining us right now from our Washington, D.C. bureau. Kailey, this letter, the tone is the same, but some of the details are different.
Right. The Treasury Secretary has said in recent days that she would try to get Congress a more specific estimate, because in her recent letters to congressional leaders, she has really given a range. She said early June, potentially as early as June 1st. We know a lot of doubt has been cast over the last week on really June 1st being a hard deadline. And now she's saying realistically, looking at the numbers, the Treasury's best estimate, again, this math is not perfect, is that it will be June 5th when they run out of cash to pay the bill. So in theory, this gives the negotiators that are still working here in Washington on a deal to raise the debt ceiling a little bit more wiggle room, but she is not trying to abandon the sense of urgency. She says she needs Congress to protect the full faith and credit of the United States by acting as soon as possible, again warning of the consequences of waiting until the last minute to do so.
And I think the idea of singling out some of these Social Security and Medicare payments, the idea here that, of course, when you start to cut off something that is a lifeline, literally a lifeline for a lot of folks, there are consequences, both economic and political. Kailey, where do we stand in those negotiations right now?
Well, Ramin, we're still looking for real news. We thought perhaps we would have a deal by today or tomorrow, thinking that if Congress needed 72 hours in the House to sit with a bill before a vote, that would be the timeline that needs to happen. This potentially gives negotiators a little bit more cover. I would say one of those negotiating on the behalf of the Republicans, Congressman Garrett Graves, spoke in just the last hour, saying that they are not any closer to a deal and that the White House has been difficult on work requirements. We have known for some time that was going to be a sticking point issue, as McCarthy had previously described stricter requirements for entitlements as a red line. Democrats, though, specifically those progressives, really do not like it. So it seems that there are still some details that they are hung up on, even if we do seem like we're getting closer to consensus on the duration of spending caps and the ultimate debt ceiling left, looking at 2 years and, of course, a 3% increase in defense spending.
Well, Kailey, it's the timeline that I wanted to talk about. And like you said, it seems like Secretary Yellen did not let up in terms of her tone on the urgency of this situation, but pushing out the X date by a couple of days here. I mean, does this potentially take us past the weekend before we could see that deal?
I mean, I hope not. Sitting here in Washington, it could be a working weekend for us all, Katie. But in theory, maybe it does provide a little bit more cover. Again, though, I would stress that this is just a best estimate. This isn't the Treasury guaranteeing that they can make it until June 5th, because, of course, we also got the data out earlier this hour that the Treasury's cash pile is dwindling rapidly, $38.8 billion as of yesterday. That's the lowest level since 2017. So still the heat is on for a deal to get done. We're all just still waiting to actually.
I just want to mention a couple of quick things here, Kailey. We are actually learning the Treasury's auction schedule coming up here. 6 bill auctions in next week. And remember, that is a holiday shortened week, so 4 days here. But according to our reporting here, and we credit Alex Harris for this, that at least based on market pricing, that would shift the X date closer to June 6th to June 9th. So maybe a little bit more time, but the fact that we're quibbling over a couple of days here and there certainly cause for concern. And Fitch Ratings also raising that concern right now with the press release out saying, and this gets a little in the weeds here, but they talk about defeasance in the commercial real estate market. And the idea here is that you can settle some of these commercial mortgage bond transactions using sovereign debt, basically treasuries. And they're basically saying, in their words, that they have to review that defeasance methodology because of the higher stress assumptions for some of that collateral.
Yeah, and of course, this follows the warning we already got from Fitch earlier this week about the U.S.'s AAA credit rating, and that could be at risk. And that really is what comes down to Janet Yellen's warning of getting too close to the X-date, too. She's trying to remind people of what happened in 2011, where we hadn't yet gotten to the X-date. We actually did have a deal, and yet S&P Global Ratings still downgraded the U.S. because of how difficult it was, because of the impasse that we saw. So that risk remains there, even as we, haggle over the exact date.